All right, Fereidun Fesharaki, founder and chairman of FGE, joins us now. He is the ultimate authority in oil. The world looks up to Mr. Fesharaki to understand what he is going to be speaking on oil, where he feels oil is there. And, I just want to remind our viewers, it's been such a pleasure to interact with him over the years. He's been very accommodative with the interview request, and 9 out of 10 times, or I would say 10 out of 10 times, whatever is indicated about oil has actually turned out to be true. What a pleasure to have you on ET Now. Thank you for joining us.
Thank you.
So
Happy to be with you.
What is your crystal ball saying, sir? Crude headed higher or lower?
In the short term, it's heading higher to $85 to $87. And, it went down because of the sentiment and the stock market crash. All commodities went down. But the reality is that it is still fundamental supply demand that is still very strong for the remainder of this year. Next year, it will not be so good. But this year, we are looking at $85 to $87 a barrel.
When you say that the fundamentals are indicating that oil should go higher, what exactly are you referring to?
We're referring to the demand on the one side, inventories in OECD countries, and the balance between supply and demand. The balance between supply and demand is still pretty tight. The demand has weakened a little bit in the past couple of months, but still very, very strong. So when we look at this fundamentals, it still looks upwards. But as I said, this is through the end of this year. Next year will not be the same.
How much importance would you pay to the current political situation in Middle East and the impact it could have on oil production per se?
Well, at the moment, there is a lot of trouble in the Middle East, but there is no impact on any supply source. Iran has promised to wage an attack for vengeance of the killing of the Hamas leader in Iran. The market is waiting for that. If they do it and suddenly the Israelis attack the Iranian oil fields, then there could be substantial increase. But we need to keep in mind that OPEC Plus now has 6 million barrels per day of excess capacity. So even if some volumes are lost in any geopolitical problem, OPEC Plus countries can make it up. That is the reason why the markets are not so sensitive to political problems, because they know of this huge capacity in the market.
How exactly do you see the US presidential election impacting the future of fossil fuels? If Mr. Trump comes back, what could it do? And if Ms. Harris or if Democrats they come back, what will that do?
Well, of course, Trump loves the oil industry, so it's always good for the oil industry to have him as president. But can he do something to increase the US oil production? The answer is no. The US oil production will peak in about 3 years, and then it will go sideways and slightly down. So I don't think presidential elections are going to help that. But will Trump try to reimpose tough sanctions on Iran for exports? That may make a difference. When Trump was president, Iran was exporting less than 500,000 barrels per day. Now exports are nearly 2 million barrels per day, because Biden decided to turn a blind eye and allow the exports to go on to make sure that the price of oil is low for the American consumer just before the presidential election.
Okay. The oil from Russia, thankfully, that supply chain has not got disrupted. Do you think, irrespective of what is happening between Russia and Ukraine, right now looks like it's stalemate, there would be no supply disruption?
No, there will be no supply disruption. Remember that what's happened is that Europeans and Americans, plus Australia, Canada, imposed sanctions on Russian oil. But that Russian oil basically all went up to India and China. So it is a big swimming pool, the oil market. And if you take one bucket from one side and put it on another side, still the same pool. So nobody wants to reduce the Russian flows because that will send the prices up. People want the Russians to export but make less money. And in fact, if you look at the prices they charge India now, it's only a few dollars discount. So there are no big discounts left anymore. And even the Iranian exports to China, discounts are very small. So the targets for making the Russians make less money actually has already failed.
You've been expressing your thoughts on gas prices, and you've been of the view that gas prices actually could remain low and they could remain low for long. Any reason for us to revisit that earlier thesis of yours?
But that will happen from 2026. At the moment, gas prices are very strong. Spot prices are strong and contract prices are strong. But after 2026, 27, there is a huge amount of gas coming in and everything is in motion. So there is no need to revisit the old theory that will happen 2026, 27 for a period of 4 or 5 years.
Okay. Sir, as technology improves, and we've seen in every other major commodity that technology and cost of production, in a sense, it changes. Do you see that also holds true for the oil and gas, and especially for crude, that technology and perhaps application will change the cost and more discoveries could happen?
Well, the higher is the price of oil, there is more incentive to produce. But we need to keep in mind that one of the factors, which nobody thought about it earlier, is the cost of carbon. If you want to remove carbon, it costs. And that cost supports higher prices for oil. So actually, carbon removal from oil production and oil refining will make oil more expensive for the consumer.
Let me draw your attention to China. First, the entire debate on whether China is slowing down or China is not slowing down. Depending on the data point and depending on whom you are asking, you are getting a different answer. What is your understanding of China and especially the Chinese economy in terms of their crude demand?
Actually, I think the Chinese economy, the impact on oil demand in China is not so important. What is important is the fact that the Chinese oil demand will peak by 2027, 28. A lot of it because of the electric vehicles, EVs. I mean, if you go to China now, you find that 30%, 35% of all the cars are electric vehicles. And they have amazing infrastructure that's put in place. So the Chinese oil demand is slowing down, not just because of the economy, but because of the massive intervention of the state in particularly in the gasoline and diesel markets. And by creating all these electric vehicles and the charging stations all over the place. So the Chinese demand for the last 20 years has been supporting the oil market. The US oil production for the past 10 years, 15 years have been supporting the global supply. Strangely enough, both the Chinese demand and the US supply peak about the same time. And that is somewhere between 2027 and 2028.
Okay. So given that EV is now increasing in terms of the new proposition, how do you think this will impact the long-term trends for oil and crude?
Well, we have another 5 million barrels per day of oil demand to be generated by early 2030s. And after that, oil demand peaks. But there is no going to be a collapse in oil demand. Oil demand will go down slowly. And mainly gasoline goes down and then diesel goes down. But when we talk about EVs, we have to remember EVs in China have been very effective. In the United States, which is the largest gasoline market in the world, 9 million barrels per day of demand. Gasoline market in the US is bigger than all the 27 countries of the European community. That EV penetration in the US is not doing very well. It is about 10% and now maybe declining a little bit because of the lack of infrastructure. And because some of the EV cars are too expensive or too inconvenient for the range of drive. In the US, you drive long distances and you need to have access to charging stations. And that is a big problem. So EVs are not doing so well everywhere, but they are doing very well in China because of the government intervention, which has made them into a great success.
So, Dr. Fesharaki, if I may just wrap our interaction with a very simple summary. You expect oil prices in the short term to go higher, it'll settle closer to 90 rather than closer to 75. Can I say that?
That's correct, yes. But not only this year. Next year, it'll be more like 75 to 80.
But where do you think the trajectory for oil is headed? When I say oil, crude is headed.
I mean, the price, the long-term price will be about $70 a barrel in real terms. And that this view holds for the next 20 years. And increasing carbon costs also are the ones which are supporting the crude prices. But we don't see the prices going below 70. We don't see a $40, $50, $30 oil anymore. That when it gets to 70, it will be defended by OPEC. And the market can balance at those prices. So the trajectory is to go down from $85, $90 I had mentioned, to 75 to 80, and then 70 to 75, and then around 70. I think this is a sustainable price for the longer term.
So I'm just tempted to have one more follow-up question. When you say the long-term trajectory for oil is down, is this largely based on demand, or you expect some breakthrough in technology?
No, it's based on demand. Technology is already included. One of the big question marks is that the additional electricity demand which will be generated by the artificial intelligence and the data centers. Of course, that will impact the gas prices more than the oil prices. But there's a huge additional demand for gas being generated that nobody is talking about that. And we need to be aware that all these new fantastic technologies, they require a lot of energy. They're not going to work on solar. They're going to work on gas. And they will play a very important role in the future gas pricing.
Dr. Fesharaki, always a pleasure. Thank you very much for accommodating this interview request. I have personally taken notes of what you've just shared, that crude in the short term could go higher, next year comes lower, and the trajectory, in a sense, eventually is headed lower. And that is something which is music to everyone's ears, because India is a crude importer, and if oil goes down, a lot of our macro concerns would be taken care of.
But please note that the oil prices go to $70 in real terms. In money of the day terms, they could easily go above $100 a barrel.
Fair point. Fair point. All right, sir. Really appreciate your time. Thank you for joining us.
Thank you.
All right, that's the word coming in from one of the most formidable voices when it comes to the world of commodities, and particularly crude. But
if you like this video, then like, share and subscribe to ET Now.